Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Hump Day here. It's Wednesday, November 28th. Hope you guys having a great morning thus far. We got a couple important data to kind of go over today. So we'll start with the GDP, or gross domestic product, for the third quarter. So on this one, we get three revisions, or we get the initiation one, second revisions, and today's numbers are the second revision. The final number will come out next month, December, for the final Q3. So we had the initial one came in at 3.5%. There were forecasts out there showing it's supposed to rise to 3.6, and it remained the same at 3.5%. So there's no change, obviously, in the third quarter GDP here. And we'll, of course, next month we'll get the final revision here. Last but not least, we got the new home sales for the month of October. So in September, we had 597,000 homes on an annualized pace. Forecast was calling for 589, and it came in at very disappointing at 544,000. Now, if you look at the numbers here, that's a pretty big drop there, right? So that's about 9% drop. But if you look at the numbers, the month of September was actually revised substantially higher from where it was previously. So if you take out those numbers, it was actually dropped 1.6% month over month versus 9%. This gives us a pretty substantial number there. Now, obviously, things are slowing down, but which we all kind of know, especially those of us in the industry, we see things slowing down. But it wasn't as bad as what these headline numbers are kind of showing out. And the media, of course, will not play this information because they like to show more of the doom and gloom type of thing and get people thinking that home prices are coming down, which in essence they aren't. I mean, there are prices they may come down, especially over the holiday seasons where people need to sell, and it typically is a little bit of a slower season. So there may be people coming down. But again, when you look at year over year, for the most part, it's not as bad as this number suggests, especially when September was revised higher. And that, of course, the media will not let you know that September's numbers were revised much higher, which kind of exaggerating the numbers here a little bit here. Let's kind of jump ahead here. The headline news: stock market is up again. We're up over 100 points so far on the Dow. It's kind of on the cusp of the speech that Fed Chief Powell is going to have. Sorry, I misspelled speech there. But he's speaking today at about noon East Coast time, or 9 o'clock here. They're going to be, of course, looking at patterns of, see if he gives anything in his statements about the patterns of the future rate hikes. We got the one we expect coming in December here. Dot plot projections were showing 3 more next year, but he's been heavily criticized from investors to especially the president's been very critical of the Fed chief, and we want to see if and lately we've been hearing some people feel that some of the comments from other Fed members have been a bit more dovish, and they want to see if he kind of falls in line with what those guys are also saying. So again, we'll have to kind of wait and see if anything that comes in there. If anything that changes there. So that could change the markets the second half if he sounds a bit more dovish. Let's jump ahead here to the bond market. Bond market yesterday rebounded. We were down for most of the day, and then towards later in the day, we kind of went upwards and closed up 8 basis points, pushing us above this 50-day moving average, which should be a pretty tough ceiling of resistance, but it's helping us. We're still kind of staying above it right now. We're down about 2 basis points and just sitting above this line here. So again, depending on what the Fed chief says, it could push us back below, or it maybe boost us a little bit more. But again, it's more favored to go downwards because if you look at the stochastics, we are kind of in an over bought position here, and we want to get typically they like to see us between the green and red lines here, kind of more the normal pace here. So when we go above the green, it's normally a normal overbought position, and when it's below the red, it's oversold position. So right now we're kind of above that. Then on the 10-year Treasury is kind of the other way around, where it's kind of an oversold position, and they have more room to the upside of pushing going upwards. We got the floor. We're kind of hanging at the floor of support. We're up 1 point, so we're at 3.07 right now, and we got plenty of room up here to go upwards. And again, so if anything, if you look at the numbers, so it could be pushed. It could go the opposite. So rates could worsen here, but again, it's looking for that catalyst to kind of push in that direction here. So, and potentially, what he says, especially if he comes out with more dovish comments, that could drive those markets into that arena. So again, it'll be interesting to see what he says, see if he kind of falls into, obviously there's been a lot of concern and criticisms. We'll have to kind of see if he's kind of following into more of a, takes more of a dovish stance of late. Well, so that pretty much wraps things up. If you guys, I do put any changes on Twitter, so if you guys want to follow me on Twitter at Mike Bjork, I do post throughout the day there, and any changes in the markets I will post on there as well. Otherwise, you guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.